We've got to participate through the cycles. You can't just try and be, buy low, sell high. I mean, listen, a downturn wouldn't necessarily, be unwelcome. Getting maybe a little bit of rationality back into, into aircraft pricing, be a benefit for everyone.
This is the Time on Wing podcast. Welcome back. I'm Courtney Miller with Visual Approach Analytics. With me, Garrick Deschavant of Collateral Verifications. Garrick, who are we talking to on this fine day?
Well, today we are talking to Steve Williamson. He is currently the Chief Commercial Officer and also a founding partner, which I didn't realize, for Crestone Air Partners. Prior to that, he was the head of trading at Crestone Air Partners. And before that, he was director, VP, SVP of acquisitions and trading for Contrail Aviation Support, which is Contrail that I think branched out, and that's where Crestone came from. Prior to that, he had various roles from analyst to senior director of Asset Transactions Group for GA Telesis. He was also a case manager for Planet Depot. Don't really know what that is, but a junior account manager at Brickhouse Capital. He had a stint at Rolls-Royce as an intern. So he's been doing a lot of stuff in aviation. He's got a Bachelor of Science in Political Science from Arizona State University. Steve, this is your time on wing.
Just a quick intermission to pay the bills, then we'll get you back to the podcast. You've probably heard of Visual Approach Analytics. Here's what we do. Visual Approach delivers contrarian data analysis on the commercial aviation industry. Subscribers can start with our industry analysis and weekly insights, and then upgrade to access our downloadable charts and visualize market trends, and even white label our charts in your own branding. If you need a white paper, a custom presentation with novel contrarian insights for your investors, or your board members, or your boss, yeah, we do that. Our objective is not to be the thought leaders in aviation. Our objective is to give you the tools to be one. Visualapproach.io. Check us out. Okay, back to the show.
Steve, thanks for being on with us. We certainly appreciate you taking the time. We always enjoy our discussions when we get together. So for all of our guests, right, we always like to ask kind of how did you get your start in aviation? Where did the passion come from? I mean, we all seem to have the bug of like loving this industry and wanting to be in it. And there's always a good story behind it, whether it's I didn't want to do aviation, I got thrown into it, or, I was a little kid and I was doing, I was at the airport every day, but it's always fun to hear that. So we'll let you kind of take it away and let us know how you got your start.
Sure. I appreciate it, and thanks for having me. It's nice to join, some of the luminaries that you guys have had here. Really happy to be joining you guys. And, when it comes to getting my start in the business, or just into aviation in general, I certainly fall into that, latter category of, being that kid who was at the airport probably a little bit too much, looking out the window, seeing everything that was going on.
Inhaling all those fumes.
Exactly.
Oh, yeah, that's right. Nothing like the smell of jet fuel, right?
Yep. I actually grew up outside of Washington, D.C., and my parents were from opposite directions. My mom's English and my dad was from San Diego. So I spent a lot of time going back and forth to grandparents' houses.
Happy medium, right in the middle.
In both directions. So that's kind of what led me to be in the airport a lot. And I also had the benefit of having some some tangential connections to the industry, I would say. My mom worked at Rolls-Royce. Starting in reception and then working her way up to, ultimately being the personal assistant to the CEO of Rolls North America.
Wow.
So engines were always of particular interest to me, just because that's, what I got to kind of be somewhat connected to whenever I would, be, homesick from school and or my mom couldn't take the day off, so all of a sudden I'm dragged into the office and I'm sitting at a random desk in there working on whatever assignment I was given or something like that. So
very cool.
Yeah.
So you grew up in the DC area?
Yes. Yeah, Northern Virginia.
And did you when you went to school, were you still in the Northern Virginia area when you went off to university, or had you moved around a little bit?
No, I mostly stayed in the DC area. I went to high school there, elementary, middle, high school, and then and then went up to Arizona for school. I was trying to play a little baseball at the time, and
nice.
Yeah, they were a pretty good baseball team. They had just won the national championship the year before I went. So, while I did have some interest from other schools up and down the East Coast to play, I figured I'd really challenge myself and head out there.
Head out to the party school of the United States. Nice.
It wasn't bad,
National champion baseball team, I might add.
All right.
So this is great. So you just wrapped up spring training, right? The opening day was not too long ago. I guess you're right in the midst of your major league career. This is one of the
greatest times of the year, just in general for sports. I mean, you've got NHL playoffs, you've got NBA playoffs, you've got the early part of the MLB season where everyone still has a chance. Maybe except for the Mets, but don't want to upset anyone who might be listening.
I think too late. You already, I'm sure there's a few that are going to be like, oh man.
Well, you had the Final Four just wrap up, right?
Yeah.
Real close to all of this. So yeah, it's a great season for sport. That's right. And spring training is unique and wonderful, and just an amazing kind of thing to be a part of right around this time of year, right before opening day, right?
Watch players kind of, progressing up, kind of through the levels even within spring training, and then, seeing, some people who might get the nod, say, even in the game, and, sitting in the stands, their families around, they're finding out, it's nice. Hope springs eternal, in spring, I guess.
Yeah, absolutely.
And so you decided to make money instead of play baseball.
Yes. Well, I decided to not play baseball to a level where I'd have to be selling insurance in the off season. And, I honestly, didn't go to school for anything aviation related or even business related. My degree's in political science, international relations. Having grown up in the DC area, I think I was, certainly interested in, what, the workings of the government and stuff like that, and wanted to, maybe look at working for the U.S. State Department. Always wanted to travel the world with what I did. So that was, something that maybe combined, a love of history / political science and, being able to see a bit of the world. So started working on that, but that was right around the time of the, the Great Recession, the global financial crisis. And there were a lot of people, also with the same idea, thinking, well, my, business career isn't going anywhere right now. People are being laid off left and right. The government's a pretty good home for people with, some skill set. And so I was coming out of school with, a significant lack of experience. And there were people with 10, 15 years who were looking for the same, entry-level government type job. So that was, that required a pivot, if you would. I'd had the benefit of, getting an internship at Rolls-Royce when I was in my last summer of university, and just kind of spun some contacts from there, into getting a job back in the industry with GA Telesis, just working on analysis. Had a brief foray into bartending. Surprise, surprise. And also, I helped one of my college roommates start a business as well in litigation support, which very much made me want to get back into aviation. Getting a sniff at it with Rolls-Royce certainly led me to wanting to really get back into it. It was interesting, and I'd worked some basic equipment leasing, entry-level sales type jobs for that, selling yellow iron, software, stuff like that. So seeing the opportunity opportunity to kind of combine the two with, at GA Telesis and, working with the asset transaction group there, that was something I jumped at very quickly. And, that's also what moved me out here to Colorado. And, been here ever since. Worked with a great team there. Abdul's been, one of the guests on this podcast. Well, always give him, a thank you for being one of the guys to, help get me back into the industry. So,
yeah. So what made you interested in, because I feel like when you look at kind of the path of your career, a lot of it is based on the trading, right? Asset trading, kind of that's what made you interested in that aspect of aviation? What was the drive to go to that?
Probably the people. It's really one of those jobs where, like, yes, you have to interact a lot internally and externally and kind of find, where that middle ground is. Being the person who's, kind of driving the deal, and it changes. Every single deal's different. I mean, there's probably, there's phases for everything, but ultimately every single transaction you look at is going to have, and deal you work on is going to have, different things that pop up, different issues that arise that you've got to work through. And it's, maybe it's the latent ADHD in me, but, it keeps you on your toes and, certainly requires you to, be creative and think a bit, solve new problems, which the monotony of, some other things that I've done previously was really what drove me away. And, I've always been kind of, driven, in this industry to, kind of continue to solve problems and, think every day, learn something new every day. And, that's something that really kept me engaged. And, it probably all comes from just, having undiagnosed ADHD.
Yeah, welcome to the club, right?
I know, which I think we all have.
Yeah, you were going to say latent. You said latent. I'm like, I don't know how latent that is. Right there with you, man. So this is what's so, I don't know, it's unique in kind of this aviation trading industry that we have on the finance side, where, I keep hearing this complaint of, why don't we have mark to market all the time? Why don't we have constant price updates? Why can't we commoditize this type of thing? And there's so much opportunity to do that. And there should be much more information available. And there's a reason that it's not. And I think you described it well. It still requires the interaction. It's kind of old school in those regards. We're still solving individual problems as they pop up, as opposed to writing algorithms that have seen this 50 times in the past and know exactly what to do. There's still that element of personal negotiation that it's just not big enough to make it boring, I guess. And we see all the same people just in different cities around the world. So you could, the relationships matter, right?
Absolutely. And, it will always be a relationship-based business. I do think that, yes, it is probably getting slightly more commoditized, but there are an incredible number of variables that can make one transaction that may look exactly the same be different. And, it could be a records issue. It could be maintenance status. It could be, anything on an aircraft that would say these two similar vintage aircraft, at similar type operators have one has a value here, one has a value here. And that's something that is going to be hard to, ultimately computerize.
Yeah.
It requires just, an analytical mind to get in there and figure it out.
Yep, and a lot of investors don't quite understand that, and then that's when I get the question of why are your values different than the other appraisers, right? Which is that's where it comes from at the end of the day, right? It's like a lot of it is just you can get two exactly same airplanes, but some of the terms are slightly different, or the deal was done in a different time frame, and all that stuff just basically kind of the nuances take over, and then it just there's difference in pricing, or if somebody has a different overall strategy where they're maybe being more aggressive or less aggressive, or right, all that just kind of affects where things end up.
But then you look at the leasing covered, analysis, and then you also need to think about, I mean, cap markets plays a lot into, what values exist as well. I mean, if you're, now you're operating in, an overall world where, the equity investors looking for, a different return threshold, that all of a sudden starts swinging the value of the aircraft. I mean, it's, it's perceived value as well as actual value.
I think I would even take that one step further and suggest that the perceived value is by far the most overpowering. And that really worked against aviation during the early years when, commercial aircraft leasing is not that old in the grand context of business, and getting banks and investors comfortable with the idea of putting millions or hundreds of millions or billions of dollars down on these aluminum tubes that go at 85% the speed of sound through the air as safe investments and safe assets takes time. And it did take time. And yet at some point it became, is popular the right word, right? Like the amount of capital that was put into the space really kind of in the last 5 years, I think is what you were probably referring to when you were saying it was being commoditized a little bit, just the amount of capital that's kind of that's kind of narrowing the margins and the spreads.
Yeah. I mean, I think, it is a lot of volume coming into the space. And, even in the, maybe slightly uncertain time we've had since, March of this year, it hasn't necessarily slowed that down. I mean, there's probably some reactivity, some needing to digest everything that's happening. That's, that may kind of cause this to slow down, in the in the relatively near future. But I think, as of right now, we aren't seeing, too much change. I mean, you're seeing ABSs, continue to be printed, stuff that's going to, retail level investors. There's plenty of that, still happening, in the finance world. And, it's yet to be seen, how much longer, this current, Middle East foray continues. But, obviously I think everyone can agree that the longer it goes on, the more painful it will become in the future. But for the time being, I think we have yet to see, really the full impacts. I mean, consider this, if it is going to go for a while, we're probably in, say April of 2020, and thinking about what COVID did, right? We still aren't sure what's ultimately coming here. And it can go one of two ways.
It feels more February of 2020. Not that I think it's going to be anything like COVID.
Yeah.
But so this is, we could talk about this for hours, but this is what I'm most interested in is to get your perspective on first what's happening in the investment space, but then why. So like, is this forward looking or inertia that's driving the continued deals? Are we just seeing deals that had LOIs leading into it just continue, and ABSs that the structure and all the work was put into it continue to close? Are we seeing new deals being sought in the uncertainty? And at some, I mean, there's going to be a spectrum or a kind of a gray area of there's some new, there's some not. And then really kind of the ultimate question is, would the investor in this capital space be slow or early to react to a real threat?
I think you also need to probably look at it in the context of the trading cycle in the year. And, I mean,
that's interesting.
As dynamic as, like the industry is, there is a bit of a trading cycle, and you can look at it, start of the year coming into Dublin, everybody wants to get something out, so they have something to talk about in Dublin, and then hopefully have it all awarded, and then you can go, have your, post-award, LOI conversations at ISTAT, and then, and then kind of work through that closing process, through the summer. And then you turn around and try and do it all again in September and try and get stuff wrapped up for year end. So I think a lot of what we're looking at right now is, and just given the timing on that as well, is, there is a bit of, current deal inertia still going on, but there have been, multiple RFPs in the market post ISTAT as well, that from everything I've seen have been extremely well subscribed. It doesn't seem like much of the trading market's really slowing down right now. So I think that, there's still a lot of people, willing to play ball. A lot of investors sticking around, not running for the hills immediately. And, the debt side of the space, seems, pretty aggressive still as well. So, a lot of that capital had already been earmarked for the space, and I think it's sticking. So, it's an interesting time to see where this turns. I for one think it's, primarily just a bit of a pause or a bit of a, call it a speed bump hurdle, just while these things get figured out. But, I think the savvy investor is also preparing for the what if.
Yeah. Well, it's interesting because when you think about I think the deals that are being put out there or the deals that are in play, they're still at, I guess, better cash flows, right? Because and so I think that's what, even if somebody feels like, hey, you know what, if we do have an impact that where all of a sudden airlines start going down or whatever, and they start to retract and not want to pay more for airplanes or anything else, like the deals that we're looking at today have good cash flow. So as long as we feel good with the credit, we know the cash flows are good. So that really doesn't influence their ability to pay, whatever that price is for the airplane, right? Because they're not necessarily looking at it going, oh, geez, if we buy this deal today, in like 6 months, the lease rate's going to go down because the market's going to be bad. It's like, well, no, as long as you feel good with the credit, they're still going to pay, right? They're not. It's not like they're going to walk away. So that probably drives some of that momentum of like, yeah, you know what, the deals are still good, even if we don't know what's going to happen.
They're still marked in, they're still written in this world of, post-COVID, supply chain restrictions, even, NG's CEOs, in extreme demand, people looking for any lift they could to help bridge the gap to the new deliveries. So, that's been, that's led to really strong lease rates, and that's what's trading right now. I think there was a bit of a trading boom after all those COVID leases kind of worked their way through, and they got through all the rent reductions, and then people took their upside, from the, I would say from the kick back up or the repayment of that rent from those restructured COVID leases.
Yeah.
And so, there was a lot of trading with that, with a lot of good cash flow in it. And, you can certainly see with, the ABS market having, fully opened up and, a lot of trades happening there. There's obviously good cash flows in those deals, because that's what you need to, have a properly balanced ABS is, quality cash flow across, both rent and MRs.
Yeah.
Capital's got to deploy. I mean, that's what it all kind of boils down to. Yeah.
So obviously you guys have been, fairly busy for the last couple of years, right? You've been in the news in good ways. Can you tell us a little bit about Crestone in terms of like what your positioning is in the industry, what you guys are all about, just to kind of...
If you could focus on the secret sauce that's like super confidential, I'd really appreciate that.
Funny, I mean, the way I've always described it, here at Crestone, is we're not necessarily reinventing the wheel. We're trying to be, a bit more efficient about it. I mean, we're a third-party asset manager for the time being. We are full service. We can do everything involved with the deal, in-house, legal, technical, financial modeling. We provide and bring to the table for our investors debt solutions across packages that we put together, and we really try to create an investable grouping of assets that we can bring to our investor partners and just simplify their process of getting involved in the space. And a lot of the people we work with investors who have done multiple aircraft transactions in the past, and we work with people who literally their first investment into aviation has been with us. So it's it's a credit to the guys in my team, and the guys in in the company who are managing the capital markets. They've done an excellent job, and it's also nice for me to have different sources of capital that we can go to and really bring different types of deals. We're certainly current generation narrow body focused, but the DNA of Crestone comes from, really the parts side of the business. I mean, I really, cut my teeth at GA Telesis, moved on to Contrail Aviation Support, and then, kind of built up the track record that we ultimately sold, to investors there. And, from there we spun out into Crestone in 2022. And that was the full bore, let's go lease aircraft, let's go start working on transitions, move stuff from person to person, and really drive value from maximizing the leases, minimizing maintenance spend, and focusing on doing I would say a high volume of quality deals and repeat business with various airlines, because we understand that ultimately we are there to support the airlines, and we have kind of this dual customer focus of there's the airlines and aviation businesses on one side, and there's the investor customers on the other side, and some certainly their interests are not necessarily aligned. The airlines always want cheap, the cheapest possible lift, but reliable and safe, and the investors are generally looking for a premium return. So it's figuring out how to balance that. And, I think we've done a great job here. We've built up a great team, from being 4 guys in a garage. It wasn't actually a garage. It was just a very modern type workspace that had 2 garage doors to allow airflow through. It was pretty cool.
That sounds like
nice.
A garage, like you just described a garage.
It was technically an office building, but to now, I mean, at Crestone specifically, we're 27 employees, across all functions, 65 assets, and and close to $1 billion under management just as Crestone. Obviously, with the the recent announcement we have of the acquisition of Arena, we're going to be doubling that headcount, doubling that fleet size in terms of number of assets, and going to about $4 billion in assets under management, because we're starting to bring some wide bodies into the fold, which have a bit of a higher ticket price. So that's kind of my main focus right now is getting all of that kind of under one roof, and figuring out where we go from there. I'm excited to kind of be integrating a team. There's a bunch of great people that we're bringing on board, and the capabilities really go from there. I mean, when you start talking about having 140 some assets, in your fleet, you start, being in conversations with, with some of the big lessors, people that we've kind of always aspired to be around.
Yeah, that's great. Yeah. And you guys predominantly focus on kind of the midlife space, right? From what I've seen in the past, is that when you guys are looking at that, what drives that decision, right? What makes that, what do you like about that space that keeps you coming back?
Well, we have some benefits of, our parent company ownership. So AirT, they're right now the 100% owner of Crestone Air Partners. And we are, we have the big benefit of kind of the family that comes with them. And that includes, Contrail, who's an engine parts company, Airco, an airframe parts company, Jet Yard, a parking and storage facility in Marana. So we certainly take the view of let's invest in those midlife aircraft, and we have the ability to provide some amount of cost control, on the back end, and some amount of backstop, when it comes to, looking at what that ultimate residual happens to be. And, we can kind of layer everything on top of there, layer green time, layer contractual lease, layer potential extensions, all that on. And, that gives us the ability to, really kind of have that firm understanding of what the residual is going to look like. And, provide, I would say, a bit of surety for our investors there. The midlife space recently has been the reliable source right now. I think, with supply chain issues, it's people aren't getting their maxes, they're not getting their neos. And so they need to keep these things flying a little bit and a lot bit. But, I think that's led to, kind of a big boom where if you talked, say 8 years ago, people would say, oh yeah, the 5B, 7B is going to, be starting its sunset period by this point in time. Everyone's going to be, getting maxes and neos left and right. Fleets are going to be turning over, and we just haven't really been seeing that.
Right. Yeah.
So.
Yeah, so that's interesting. Just the term sunset, because I hear that often. And when does sunset start? Like, is it afternoon? When, because that's kind of what it feels like. It feels like it's like 2:00 in the afternoon, and people are like, sunset. Like, look, it's going down. Like, yeah, no kidding, it is. But it's gonna be a long time, and these airplanes have a lot of utility until we get to that point. There's still more of those than there are new tech. Maxes and there will be, yeah.
There's been a lot of people, I've seen like, well, let's compare this to the classics and stuff like that. And I'm like, you can't quite do that because
right.
It's the order of magnitude greater that you are with the production of the NG and the CEO. You can compare fruit, but it's apples and oranges.
Yeah.
So. Yeah. I do think that we're talking about a noontime period, but that's a noontime period that realistically is running from 9 a.m. to 4 p.m. This is
depends on where you are in the world, right?
Yeah, exactly.
But, no, it's true, and it's funny because that classics comparison is always interesting, right? Because it isn't a comparison. It really isn't. Yeah. When you look at and when you start kind of diving into their historical data and how those airplanes have reacted over the years versus how NGs are reacting, and it's night and day, right? It's so different. And you're right. It's because you're looking at, a fleet that was over 5,000 airplanes, whether it's NG or A320s versus I think 1,200 or something like that for the, on the 737-400, right? So it's just such a smaller fleet, right? So it's definitely interesting that you say that.
Yeah, well, people were trying to force it with the conversion boom right around COVID. They wanted to see if they could get that started, but I think very quickly we realized that these aircraft are still needed for their passenger capacity, it's no secret that the narrow body freight market's been pretty rough the past couple of years, but. I certainly have a lot of faith in that market. I think that it will, start becoming more relevant, and maybe is this the turning point for that? I don't know, but we've obviously got our eyes on everything that that's happening in the market space, and trying to see if we can utilize some of our current kit to help, the cargo market as it sits. There's still so much demand in the passenger side that it's kind of hard to, pivot over to these lower utilization, cargo players for the time being.
That dynamic during COVID, I think, with narrow body conversions specifically, I think there's a lot to learn from it, and it exposes a lot of the weaknesses that we just have in this sector of the industry, which is we still react. Uh-huh. And there are long lead times between the decisions we're making and when they'll be implemented. Too long for reactions like that. And you could kind of watch it happen. And I remember, Garrett, we were kind of scratching our heads at the time at just the rush into these narrow body conversions. And we would ask the questions, well, why? And one, you had the news of, you had the Praetors, or whatever we were calling them, the passenger freighters, for very good reason, right? I mean, for very, very good reason. But that was not something that was going to continue forever and ever. Amen. It was because we just happened to have airplanes with seats in them that we wanted boxes in them, and suddenly those seats would become more valuable. So that dynamic was going on at the same time that Amazon was acquiring and extending some of those 738s, I think, with Sun Country at the time. And so there was this idea that, well, this is just going to keep going up and to the right. And then it didn't, like, at all. I applied that to today, and nothing with the Middle East and oil commodity challenges and all that. More the idea of, look, the narrow body cargo market can be oversubscribed and still a good market.
Yeah.
Right? I mean, the two aren't necessarily, it just, like, look, there's natural demand for narrow body freighters. There were too many put, into that conversion line. We can also overdo it. And this is kind of more the concern as we kind of hit the middle of the decade here, on the narrow body market. How much of this is a trend and how much of it's a cycle is really what I'm saying. How many of these deals being written today are assuming up and to the right, like they have been in the last 5 years, when we approach that cycle where probably the better attention is paid maybe on the conversion market, or maybe into these places that have been undersubscribed in the last couple of years.
The thing is, there are a lot of those converting freighters sitting on the ground right now. Mm-hmm. The engines just proved to be valuable enough to take off wing.
Yeah, without engines,
you could save your deal by flying those engines. So there's going to be a requirement for reuptake of those, but now they also need to find engines that have likely been burned down pretty far, and there's still shop visit lead times are still probably a bit longer than everybody would like, and that ultimate restriction on the overall from the overall supply chain is hasn't gone away. So right. The underlying reasons for these aircraft being on the ground aren't necessarily going away, but it will be a challenge to get them back up afterwards when these things when these issues do start resolving. So
the same on the wide body side, right? I mean, Garrick, we've been talking about this where, look, the conversion economics are terrible for wide body aircraft right now, not because the wide body market's soft at all. Like on the conversion side, they need wide body converted aircraft probably as much now as ever outside of crises. It's just that the passenger market's so damn hot that you can't get one for the price that's going to make it work. So you just got these weird dynamics that are kind of hitting from both sides.
Yeah, and I mean, and the engine, certainly comes into play on that side as well. I mean, Trent 700s, very, very hot green time asset type right now. GE90s, especially the big boys, the 115s are, absurdly hot. I mean, good luck getting your hands on them. It's kept, the CF6 market, blazing hot, with 7.6s and 7.4 freighters, still doing work. It's a familiar story, but it's also, a bit new, I would say, in terms of just now we're hearing it in the wide body space.
Sure. Yeah. And on the engine side, especially now, and we'll see how long this lasts, but fuel prices definitely impact kind of what those older aircraft are going to be used for. And it's kind of interesting from the conversion perspective that while the shift out of passenger may be not accelerated, but not prevented as much to allow some of that feedstock to become conversion candidates, these engines, even with the higher fuel burn at lower utilizations, make great candidates for conversion. So, which ultimately then kicks out some of the older stuff that's been flying that they didn't want. So even though it's the prior technology, it's from a cargo perspective, it's not like cargo prior technology. Right. Those are like JT8s and
right. Yeah.
Yeah, I think one thing that I actually would like to get your opinion on, Courtney, is interested to see just the general demand coming to the States, and how that's also impacted by the fuel crisis, right? Because we're seeing, or at least I've seen anecdotally, some airlines, removing routes to the States in order to pivot to, other locations, and also claiming that fuel is part of that. I think it's more, it's obviously not U.S. carrier based, it's certainly, foreign carriers. Right. And, is this going to be, call the reason what it is, is it politics? Is it fuel? Is it obviously some combination of it? And, is this something that, all of a sudden magically on, January 21st, 2029, disappears? I don't know. I just, I found it being somewhat interesting and wondering if you had a thought on that.
Yeah, it's not great. At least the stuff that we're seeing, but there are headwinds and tailwinds, right? So like the headwind, obviously the point of sale really matters. We are definitely seeing, I don't know if you call it book away, just a drop in demand to the US. But there's some context to that. One, there's an overall kind of demand impact to high fuel prices and just the uncertainty. So that just kind of overlays everything. The Canadians are really down coming to the US, but they've always found somewhere else to go. The problem now is that the other places to go were largely Cuba, and they just can't. So domestic, there's some transatlantic. But by and large, yes, the other tailwind that's coming is the World Cup. Yep. Which is just going to be a tailwind for foreign visitors to the U.S. So it's more of a question after that. The other interesting tailwind, it's cheaper to fill up once you're in North America to take it back. Yeah. So we'll see. It's still the question. Anytime I get the question, how long are people going to remember? Everybody wants to say we will remember forever when I was slighted in the moment. And just like COVID, probably the best lesson out of COVID is just how quickly we all forget as a public. And so even with the challenges that we have going on right now, yes, there are impacts. I'm more interested in how it impacts the economies, which would be longer, have that longer kind of deeper impact. But, I'll tell you, when you're sitting in Ottawa in January, and I'm sure there are plenty of people who will disagree with me, and it's minus 40. It doesn't matter if it's centigrade or Fahrenheit at that point, and Cuba's not available. Yeah, screw it. I'm going to Florida. Right? I mean, right. As long as there's no weird True Social tweet or whatever that day, right? We do tend to forget a lot. That stuff's pretty short term, not like years long, but probably seasons long. But we are definitely seeing that during these seasons for sure.
Canadians obviously aren't going to Cuba. You can't get fuel down there right now. So what you got? It's Mexico, it's the Caribbean, but
yeah, and it's the resorts in Cuba, right? The lights may not be on, or I think it's fine now, but they're not really going back. We haven't crossed the Rubicon to where we would consider these impacts as long term yet. So or not. I don't know.
We'll see. Yeah, that's right. I haven't looked at the news yet. You don't know what else came out today, right? I mean, but it's interesting, right? Because you figure, you look at all this stuff that's going on, and yet you look at the stock market in the U.S. and it feels like, it's down today, but it still seems to be unfazed, right? It's kind of like, it's not like the war's ended or things have changed for the better, and yet the market's reacting, has been reacting positively. So it's kind of like, it's a weird how the U.S. looks at things in terms of, how investors react. I did have a question in terms of so when you're, as you guys kind of progress into, the next 5-10 years, right? How do you know when to start making the transition towards the next generation of assets. Because at some point you do need to probably shift away from that, from the midlife space that you're in today to looking at, Neos, Maxes. It's, with all the issues today, it's like, do you really dive in? Do you want to deal with that? It's probably still, very competitive space. So the returns may not be what you're looking for. But so how do you start making how do you change the mindset to kind of start going, well, now we need to kind of think about how do we get into that space so that, we can be around for the next 5, 10, 15, 20 years.
Yeah, I mean, I think it's, it is the future. So, we obviously have to, consider that. And it is actually some of the, we've begun taking the first steps towards that right now. We've actually acquired our, first new tech assets. We did a sale leaseback for some Leap 1Bs. So that is, we are, working that direction in terms of getting a better understanding of it. And I think, from a measured point of view, we would look at it from a perspective of, yes, let's start with the engine leasing, get to know what you need to know about the engines, because that's going to be the biggest, uptake technically and, professionally for us. And then, moving into the aircraft, because, the tube's not that different in the long run, let's face it. But, I think, we're probably going to be getting a bit more aggressive into that, I would say relatively quickly here, because as you're seeing, some of the brand new aircraft lessors move their way down into the midlife space, because that is where there is availability for them to deploy capital. There's actually assets there that can trade, and that's part of what's been driving pricing, so heavily right now, kind of a move of, less expensive capital into the midlife space. We also need to start, kind of looking up, just because now those actually, those Neos sometimes have become, Neos and Maxes, I should say, have become slightly less desirable than people wanting, current generation kit. And so when we're trying to pull together a portfolio from a seller, we need to look at the blended mix and trying to bring in a little bit of everything, because you've got to solve problems for people while you're also solving problems for yourself. And that's the beauty of the commercial world is, you definitely need to, take a little pain, sometimes to get what you really want to sink your teeth into. And so we've been working on that currently. We will actually be bringing some Maxes and Neos into the fleet with the Arena acquisition, and that certainly brings the technical knowledge of those assets into our team as well. And so we're very excited about that. Looking forward to to really analyzing more of it and seeing what else we can pull together.
Yeah, great. Yeah. It's always I always feel like it's a bit of a tricky thing, because you kind of have to, like you say, kind of get your experience based on, especially with all the issues that have been going on. It's like, let's not jump in and basically buy in stuff that is going to be problematic to begin with. And how do you progress forward when also everybody else is in that space too? Right? Yeah. It feels like everybody's kind of in all spaces. So that's great.
You almost have to be, and like it can't just be a technology divide too, because when you start talking about the ages of what is the definition of midlife. I mean, someone will tell you it's anything from 5 years old to part out. I would say it's maybe a bit older than 5, but the oldest Maxes and Neos are approaching that 10-year number right now, if not there. And you could certainly say that these are aircraft that are at the back end of their first lease, either looking to transition, and when you start talking about transitions, you're definitely talking midlife. Yep. So that's where we're at with those assets, and it's forcing its way into our space, and I guess it's the you can't beat the march of time.
Yeah, absolutely.
Yeah, and that's interesting as well, right? Because the engine is just so much more important. On this sounds like the most obvious and stupid thing I've ever said, but trust me, I've said obviouser and worser.
Yeah, I've heard it. Yes, I can attest to that.
But like They're re-engined airframes, so clearly by that logic, the engine is kind of the benefit there. But kind of taking that, dipping your toe in on the engine side, really, it's where the demand is, right? So, for instance, if you have an engine that can't hang on wing much longer than 3,000 cycles, suddenly those cycles get way more valuable.
Yes.
Because the engine can't perform. Like it's this upside down and weird kind of situation. And granted, GTF LEAP engines are improving in their durability and reliability. So we're moving in that direction, that path. The question is how far they'll go and at what speed. But it kind of is inevitable, right? At some point. Not also to mention, and I'll take credit for something that Garrick's been saying for a long time, and that is, hey, look, in about 3 to 5 years, we're going to have a real shortage of midlife coming off those first leases. When we weren't built, that represents the airplanes that weren't built during the max grounding and COVID, right? So there are different dynamics to be played, like you said, not just across the technology line, but really kind of the various vintages, how those vintages represent engine maturity, and what they have incorporated into it.
Yeah, I mean, I think I might be a bit of a homer for Max and CEO engine types. Having really kind of built this business, but grown up, I would say with it as being the core of of the industry and of the business. I think that they are probably that perfect mix of performance, reliability, and cost. Where I think the new tech stuff is probably they pushed the limit on performance, and that's ended up costing a bit of reliability, and in turn that's pushing up cost. I like the way you put it, when you talk about the value of those 3,000 cycles, because you need to look at it from both sides. It's, well, yes, they are valuable in that people are going to want to, pay more to operate them, but there's also the cost of accessing them. And so, it really is, true value. And I think that a lot of operators are, seeing, now obviously with fuel prices running up, you're definitely getting a bit more of a push to, get that, that operational savings on the fuel side. You're willing to, take on that, maintenance cost risk going forward. But, I would say up until, March of this year, I think people have been preferring to stay in the current generation kit just because you had a no maintenance cost. You're talking about, not a massive mover on the fuel side, given where fuel was at. So it just made, a lot more sense to defer any of that maintenance cost. Outside of, operators that were forced for various reasons to, really think more green. I think a lot of people were really sticking towards, we have a known quantity and a known cost over here, and moving to this new, more sustainable, which is certainly a benefit for the world, and for us as a business, probably in the long run. But that maintenance cost is certainly offsetting any savings I'm getting from the fuel. And I've got to operate a business here,
Yeah, right. I'm not even convinced that it was necessarily better for them in the long run to make the change given those situations, right? Because not only are you dealing with losing, there's more cash going out the door for maintenance, and the aircraft, which is now suddenly depreciating faster because there's more cash going out the door for maintenance. So it's self-feeding in that perspective. But the disruption to the passengers and the damage to the brand and just the idea of reliability from kind of that passenger experience perspective, that's changed, and we'll see how long it stays that way. But memories are long, right? So just like you were saying, the airlines that were slow to make that switch had very good reasons. Those that did make the switch still hang on to NGs and COs as long as they can, because they know they're there when they need them. And then there's that next level. There are airlines who have transitioned back completely out of the new kit, back into midlife because it was just killing them.
Yeah. Yeah. I mean, I think what's interesting today is even with fuel being at, what is it now? 450 for something, right?
It's like $23 a gallon, whatever it is. I don't know.
Whatever. Yeah. I mean, it's still, so even though it brings, I think that because of the fuel efficiency, I think it brings things on par between like an NG or a Max 8, but you're still getting the durability out of the NG, where you don't have to do that shop visit for, a lot longer than you would on the Max, right? And so we're still at that, even though the fuel efficiency is becoming more attractive, right? You're still at the point where, yeah, but you know what? Those, it's costing us more to operate the NG, but we're still, if it's a fresh engine, we've got such a long runway before we have to deal with the next shop visit. And in the meantime, you're also dealing with double-digit escalation, coming out of on the Leap, on the GTFs, and that you're maybe not necessarily seeing that, as high on 7Bs or 5Bs or the NGs, right? So it's still creeping up faster than the rest, right? So it's something that, airlines have to keep in mind when they look at this stuff, which is why, I think we agree that, there's still a nice runway for NGs and, to go well into the 2030s, from that standpoint. Yeah. Yeah.
And there's really no reason to get rid of them. I think that's a little bit different. So in a high fuel environment, uncertainty, let's say demand takes a hit, or like we're seeing in Europe, some countries are like, fly less. Airlines are given, they have two options. First of all, you keep flying the Leap or the GTF powered airplane because fuel, and that's just kind of the operational decision, but you don't get rid of that midlife airplane. It works incredibly well as not really a hedge, but as that flexible fleet, right? So these airplanes don't go away. They just don't necessarily accrue time, which is important and good, right? I mean, they're depreciated further down the path. From a lease perspective, we'll probably see more, fuel stays this high for a long time. We'll probably see more returns on the older leases, but not necessarily retirements of these aircraft. Utilization may come down. They start to fill a different role, and it's all because of that reliability. Because you have to consider as well that if fuel stays high for too long, then just overall demand is going to come down, and then the question I always kind of put this, I think the question of what aircraft type an airline retains and which they kick often comes down to which has the biggest cash bill coming due sooner. And sometimes it's just as simple as that. I don't want to write that check. And the idea that the bigger checks are only coming on the older airplanes is no longer a given, right? With the shorter lead time or the shorter intervals on the new kit. So there's just a lot of things that don't suggest that the midlife space is certainly not going to fall off a cliff anytime soon.
Well, and up until I keep saying up until March of this year, a lot of airlines had shifted over from their largest cost base being fuel to being personnel. And, the fuel being more on par with maintenance. So you kind of start looking at both of those as, okay, well, I can optimize one versus the other. And, you can choose to optimize the maintenance, get that more reliability. And, the fuel is, kind of less the driving, the decision driver than it used to be in the past. I think, a lot
of those
of
pesky people, they keep wanting to be paid.
And more. Yeah, I know. They keep wanting those raises every year. Ugh, that's why I don't hire anybody. It's not worth it.
But that's an interesting point as well, right? Because just the overall, just the percentage of costs to an airline is much less, much lower level of fuel than it has been in the past when we've gone through some of these fuel crises, simply because of, upgauging and technology. So that changes the dynamic of how we look at and how the airlines ultimately look at what asset they're going to use, what asset they're going to retain, but not use as much, and which they're going to dispose of. That it's fascinating. There's just a lot of different dynamics at play right now.
Yeah. So as we potentially enter into the next downturn, whatever that looks like, right? There's definitely a sense that we might be going in that direction. I think the longer the war continues, right, the longer the more likely that's going to happen. Normally, everybody gets excited about the fact that, you know what, if you've been in the industry long enough, you'll know, okay, if things start getting bad, there could be some interesting opportunities that come up. But as I think we kind of learned through COVID, it feels like the industry's gotten smarter about the cyclicality of the industry. And so I feel like there's fewer of those opportunities that are out there, right? So from that standpoint, I guess, how do you guys look at that? And how do you feel like, how do we stay on top of things to be able to take better advantage of opportunities when they do come up? Or what do you do differently to kind of stand out amongst the rest to be able to get more opportunities? How do you guys look at that?
Yeah, I mean, I think it's a matter of, knowing the cyclic nature of the business. It's a matter of, you got to participate through the cycles. You can't just try and be, buy low, sell high. I mean, everyone knows you try and do that, you're going to hit a period where you're not going to be doing anything and you become irrelevant. I think it's important to, stay involved and, make wise decisions. I mean, the pacing of acquisitions may trade, and, do you have a fleet that, you have enough term to kind of, weather a coming storm with, quality credits? That's really the mindset for the near term. When it comes to looking at opportunistic future, I would say that, I mean, listen, a downturn wouldn't necessarily, be unwelcome. I think that, getting maybe a little bit of rationality back into, into aircraft pricing, would be a benefit for everyone. I think, investors would like to see, returns kind of come back to a level that has been, historically what's there for, airline credits that, a lot of banks will tell you they've never seen a good airline credit in their life. They could be talking about Ryanair and they'll say they've still never seen a good one. But I think that something in kind of like in like proper, double-digit returns for everyone, be that, kind of, at the bottom low teens level up to, up to the, low 20s is probably a band that I would say things could return to, and you would still see some trading volume and see, and see capital stay in the space. I think a lot of capital providers would say, well, yeah, if you could promise me a high teens all the time, I've got unlimited cash for you.
Right.
But, when you have to look at what's a realistic case for something, and when you get into that downturn, it's kind of hard to say, yeah, well, engine values are going to continue to run, up and to the right. It makes it more difficult to make those investments with those potential, high returns up front. So it comes down to having a very good relationship, not only with your, investor parties, but also with your counterparties, people who you've worked with, for a long time, people you trust and know that the execution is going to happen. Execution risk has always been paramount in the industry, and that's why it's also very, relationship based. I think that, when you start hitting a downturn, just having that knowledge that you will get a deal done, regardless is certainly a big benefit. And, you saw that in COVID. There were a few deals that fell apart, during COVID, and I have a feeling there's a couple of parties there that, probably won't work together in the future. So, we try to, stay committed to what we've signed up for. And here, and we think that kind of carries us through in the future, and we'll continue to.
Whether the downturn has started or whether it'll be another 5 years, does it getting back to those consistent double-digit returns kind of across the industry, does that require kind of a flushing out of capital during the downturn to get back to it?
Probably a little bit of that, yes. I think that you need some of those people that were here, to invest at, those kind of mid-single digit returns, be like, okay, well, things are actually, now that I've been investing at this level and things are getting a little bit more risky, they kind of they'll want to step out. And that'll provide ultimately a benefit for, the more patient and resilient capital that, understands, aviation's, continued growth, year over year. If you go back, 30 years, 40 years, growing it on average 3% a year, all the way forward. Yes, there are a bunch of up and downs, but if you can keep your capital in space for the long term, you're getting, a pretty, safe return on your investment. So I do think that requires a flushing of some of these people who ultimately get burned.
0.5%, 0.5 lease rate factors. Let's go. 0.5.
Yeah.
But like that makes sense. I think one thing you said was, the patient investor. I think you're missing kind of the link in between there, which is the group that informs and keeps up to date that patient investor, right? That's where the quality asset management teams, with the experience, with the technical knowledge, really start to differentiate again, like we saw during COVID.
The secret sauce. There you are. You took
we got it. But it doesn't
We
count
got
if
it.
I said it. But yeah, right. And it's not a secret. Just kind of across the industry. This is, especially, we started before we started recording, kind of mentioning AI, but still what it all boils down to is just the good, knowledgeable people able to know, have the technical expertise, the relationships. And it still comes back to those, what was it? Mark 1 human type things. And it's kind of funny to say, because we have a lot of guests and we talk about this, but we have seen this, right? You do see this across the industry where maybe capital isn't quite sure what they're getting into. They like the lease rates, but the residual value assumptions are a little not
Optimistic?
Not sure.
Yeah. Well, yeah, and that is definitely, I think it's probably an issue that you guys deal with today, because you're, for the last couple of years, we've been in an environment that's been so good that for those that are selling assets, you're able to justify these high numbers, right? These high prices, whether it's, from a part out standpoint, whether it's from, the value of green time, you can show, look, we've been getting these prices, right? And based on supply chain issues, which even if we go through a downturn, that's not going to change either. That's kind of here to stay for a while, right? All these different things kind of you can keep that story of like, oh, you know what? Things are going to keep at those levels. But if you've been in the industry long enough, you know that at some point, something's going to change and those numbers are not going to be there. And so how do you educate your investors or your clients to be like, hey, you need to understand, and we've done this, and we know, and this is why you need to think like, well, you can't expect to get, a $4 million price tag on a core for a 7B engine for the next 10 years, right? That's not realistic. But if you're talking to somebody that's been doing it for the last couple of years, like, yeah, but we've been getting it. So of course it's going to,
I've seen that my entire career.
Right? Exactly. Right. Yeah. For guys that have been in the industry for 2 years, like, I've been getting it my whole career. So yeah, is that a challenge that you guys kind of deal with when you're, especially if you've got either new investors or new clients that you're looking to get on board?
Well, it's definitely it's a conversation point, right? And it has to be, because you almost think, as we were touching on, the order of magnitude difference in, the fleet size between Classic and G, talk about the order of magnitude difference of the, ultimate upcycle we've been on compared to anything, in the past. The length of time. Yes, we did have the COVID blip, but, really since, the great financial crisis, up until now, it's been, one direction. And it's been, pumping really strong for a long time. Does that equate to, a mega down cycle, or does that create, say there's just far too much momentum right now for, whatever this down cycle, happens to be, to really, does it just pull the sting off of it because there is so much momentum going up? And we have that conversation, very frequently, internally here at the team with the investors. And, we have to underpin by what we know in the long run, which is what we have been seeing on the trading side. But we've also got to bound it by, taking a smart look at what we do think the future could hold. And, does that mean, a complete, fall off a cliff? Does that mean,
right,
a nice soft landing? Does that mean what what downturn, and just, keep on running up? You really don't have to think too much about that one, because that's just, okay, hey, everyone makes more money.
Yeah.
Great.
Yeah.
So, a lot more thoughts being put into, what does this, what does this down cycle look like? And, like you guys touched on, I think there are a lot of mitigating factors out there that, tend to make it seem like it's going to be a relatively soft landing. The supply chain issues are still there. It's, the midlife stuff, the CEO of the NGs, there's going to continue to be value in building those for an extended period of time here. There's still Dash 3 shop visits going on. I'm sure there's probably even older engine type shop visits going on that, we're not seeing. But, when you think about, again, going back to the size of the fleet, there's the demand side of the equation doesn't necessarily seem to be going anywhere. So it's a question of, when the supply side figures itself out, and if there is a, massive downturn in, in overall travel demand. Those are the biggest things that we're, looking at on our side, and, really keeping an eye on what Courtney's putting out to make sure that we're, staying on the cutting edge.
Did you hear that, Garrick?
That's right. Yeah.
Well,
Nice.
listen, I'll add one more kind of tailwind to all this, and that is just the memory of these airline CEOs. Once we hit whatever the downturn's going to be, they know what got the last guy fired was getting rid of capacity. I don't mean pulling his schedule down. I mean getting rid of airplanes that they can never get back again. We're putting them in storage with run-out engines, and they just you can't get them when you want them, and that's gonna keep that fleet. They're gonna be paying leases on that for longer because they don't want to remove access or the flexibility. Those memories are long. I could see that propelling us until it doesn't.
Yeah. Well, and it's, I think there's also something that, to me, I think gets too generalized very often and I think people forget that if you look at whether it's the A320 fleet or whether it's the NG fleet, you ultimately, you kind of have three iterations of the fleet within that fleet, right? You've got the initial 7B-26s, and then you've got the tech insertion that was another, part of the fleet. Then you've got the evolution, which is another part of the fleet. And yeah, COVID kind of kept a lot of the initial tech, flying, and it's still going today. But at some point, those should have gotten retired based on age and everything else. And so that at some point needs to happen, right? But that doesn't mean that all NGs are retired and they're all bad, right? And I think, unfortunately, people just kind of look at a 737NG as an NG, and that's all it is, right? Or an A320, and it's all it is. And you're like, well, no, there is differences, and it's trying to. I think it's educating people on the differences to be able to say, look, there's benefits to the next iteration of that product, right? Which is still the same airplane, but it's a better one. And so that's why those are going to keep flying for another so many years, because that's just a progression, right? You have to understand that.
Yeah, the sub generation, if you would.
Yeah, right. And that's something that we will see on the Maxes and the Neos at some point, right? As you get into like the advantage, over versus the disadvantage, right? As Courtney calls them, but that will happen as well, right? But that's still very far out. But I think people forget about that because they just look at, well, it's a 737-800. It's like, well, no, they're not all the same, right? And you have to pay attention to that. And so if you're all invested in the older stuff, that could become problematic, yes. But if if you've kind of been smart and you've got a diversified fleet of that same airplane, I think that's how you make it through.
And the 800's pretty homogenous in the grand scheme of things. I mean, against the 320, I mean, like those are the early builds are nothing like the later builds, right?
I don't have the number at my fingertip, but how many Evolution OBEs have actually gone through their first shop visit at this point, or how many are still remaining to go through their first? Because
most.
I think it's like 2/3 still haven't gone through their first shop visit. Right.
So you can't necessarily talk about that being a sunset engine type. I mean, you could maybe talk about the initial, non-P, not non-TI ones being sunset type, right. But when you have 2/3 of the fleet that hasn't gone through its first shop visit, it's going to drive that fleet to be alive for a long period of time, and that certainly speaks to the value of the current generation kit.
It's like a far northern summer sunset where it just kind of it's like, why is this slightly less bright than it was?
24-hour sunset.
Yeah,
it's just like right on the Arctic Circle, right?
Yeah, right there
in July.
Yeah. All right. Well, hey, look, Steve, we've been on for almost hour and a half here, so and it's been a great discussion. So thanks for talking to us today. It's great to hear kind of how your success over your career and now with Crestone. So fantastic. We look forward to kind of seeing what you guys are up to next over the course of whatever happens next. But definitely thank you for taking the time to talk to us today.
Of course, you're welcome, and thank you for having me. This was a lot of fun. Always enjoy chatting with you guys, and happy to take the time.
Anyway.
So how do we do this again?
I don't know. It's been a while. I know it's been a while.